This is just Amazon for Friday, January 24th, 2020. And we'll get into the 5 minute in just a moment here. I just want to remind you that this week, starting the 27th, is a free week at a trading company that I'm a part of the community. It's a week to learn. It only happens twice a year to learn, jump in with other traders, people who share their wisdom and knowledge of the market. I hope that there's some folks from that community that are subscribed to these videos and are learning right along with me on how to trade Amazon. So if you are interested in jumping in just to learn and find out more about it, send me an email. I'll send you my referral link, and we'll see what we can find out together this week with earnings, with all kinds of things happening in the market. So yeah, jump in for the fun. Right back in here to the 5 minutes, 5 minute candles on Amazon opened up right below this gap from days back. High wave candle, stair step going sideways here for quite a while, for 30, 40 minutes here. Started to break down, another stair step, and ultimately stayed below the 21. Didn't even touch the 21 until it really had this pretty massive retracement, the largest it had all day, really. A lot of bearish candles, actually bullish candles. There were two in a row here, two in a row here, two in a row here, two in a row. You got three in a row. The most you had was three bullish candles in a row, all day long. Just so much bearishness, so much selling coming in. And this actually makes 3 Fridays in a row with a lot of selling. The 24th, the 17th. Remember, this week was a 4-day week, so it's only the 5th candle back. The 17th, excuse me, and then the 10th. The Friday before that was this day, and that was where we had gapped down, massively down, and actually got bought up. It faded, but each of the other Fridays have been, even this one, actually, the last Friday candle and the 24th candle were the ones that, the gap up looked like it had the potential to go bullish and to continue higher, trapping bears. Friday's candle looked like it was gapping up from a high wave candle, and we'd continue higher, and there was a little bit of a move up, but it just didn't go there. And so really when this broke down, and then when this broke down, you knew that it shouldn't do that, and because it's doing it, something bigger is going to happen, or at least something not bullish is going to happen. And all day long, it sold off. If we jump into puts, we were looking at the 1880 puts. They started out the day under $1, or came down to under $1. Really opened up. Let's see, 164. So between the $1 and $2 range. Dipped below $1 and then pushed back up here more than $2, came back below $2, below 150 even. It would have been an incredible opportunity to get in to even the 1880 puts, this late into the day, like 10 o'clock Central Time. 10 o'clock Central is right in here. When this broke down and doing some retracement back into the 21 here, or at least being held down by the 21, there were some opportunities to buy puts here. And we've had 1880.05 as a pivot for a long time. Even just getting into 1880 puts right here seems reasonable, that because it already broke down from this gap, that maybe it'll move lower, and it should move lower because it's not having a bullish move. So that would have been a very clear target just minutes later at 10:20. So going from, let's say you bought at 10 o'clock, for $1.50. At 10:20, it was already up to over $5. And so you could have exited there and been done for the day. Had you held on, it just kept going up all day. The puts kept going up. Even during this retracement right here, the 1880 puts were about 10, little less than $10 in the money, and you can see the price came down to between $9 and $10. And I always like looking for a 10 by 9 setup, and that one actually worked. Now again, you're trusting that all these bearish candles are going to continue to push this lower, that you're only having two bullish candles in a row, which you didn't know at this point was going to be the case. Like I said, there were three here, but every other time we got one or two bullish candles, that was it. Big change from what we've seen the last few days with just that. I mean, just look what we had on Thursday. Just these grind, this grind higher in the 5 minute. So anyway, down in here, it didn't come up to the 21, easily could have. There's a little bit of a gap here. Let's zoom in on just the day here. So there's a nice little gap here. Then that looks like that's what was holding. So that would have been a nice place to at least have an entry at, if not a stop, and get in right in here and just have that be really, really tight. That's what this candle, this line came from, was from one of those gaps where it was just holding a level. Let's see if we've got that still on the 5 minute. It should be. Yeah. Okay. So go back to this day. There was this gap. This is going back to 2 Fridays back on the 10th. Drawing the line in at this gap and then drawing a line in at this gap. And that is what has held, aside from this push up to 1900 on Wednesday, and a push into that price on the same day. Actually, I guess Monday as well. So only a couple times did we actually push through those gaps, and it looks like we have another one now in this area. Oops, sorry, I'm putting in the wrong place. Down in this area around 1872, 1873. So when those come in, they can be significant. And in this case, it looks like the rest of the day was held below that level. Even the bulls couldn't push it higher through that gap. So that held. Let's see if we have any other ones in here. Looks like we were starting to have some exhaustion volume. It looked like this was a nice spike in volume that quickly got bought back up. So this is where bulls were trying to come in and turn it, and it didn't actually happen until down here with a hammer and a nice Morningstar reversal here. And there's no pivot here. It's just a nice round number at 1850 that it could reverse. And so, looking to get out of bearish positions, looking in to get into something bullish, it did retrace almost to the penny. 1863.84 is our pivot, and it made it up to 1863.78. It came down, pushed down right here, really close to the pivot as well, and then broke it here on this candle. So, just a really, really nice retracement that you really could have seen coming, or at least been positioning for. And again, getting out of your bearish position. So getting out of puts up here, very quickly moved down. And so had you been just letting this ride higher and higher and higher, getting out at 1850 was a really nice place, a really nice round number to be getting out, but gave you the candles to suggest something's changing here as well. So that would have been getting out at like 30, and very quickly, like I said, it moved back against you, and you would have lost, had you been into just one contract, 10 by 9 down here, and it went up to 30. I mean, that's still 20R gain in the course of, 2 hours or so. 2 hours, not even 2 hours. Actually, yeah, about 2 hours. And then quickly moved, and you would have not lost, you still would have been up, but, moved back by 4 Rs. That's the kind of thing. It's like you're trailing your stop. And even if you had trailed your stop really tight on that candle, you probably got some slippage on this one and probably got trailed out at like 28 if you were doing that. The other thing to be looking for there is some sort of like a bounce. So if you're looking at 1850 calls, they were not worth very much down here, but they were still, right at the money. And it may have been a little bit difficult to play this with 1850, just because the range in these candles was still more than a buck. All these. This one was 150. This was 125. Probably would have needed to go out a little bit, like 1860, and just done like an absolute zero. And that could have worked here, getting in 1 by 0 and flipping it out as it moved up to the 1863.84 price. put in a high here of 460. So getting in 1 by 0, absolute zero play with one contract. You could have been exiting at $2, $3, $4. Even 460 was the high. So $4 would have been a nice target. Even be able to exit right here. That would have been a nice 3-hour retracement on that kind of a move, and maybe even got a better fill if you had just set it up. I'm just going to get in. After this big of a move down, it makes sense that it would hit a nice round number like this and bounce. Just because it just can't keep going down, right? I mean, it could, but the probability is probably higher at this point that it's going to retrace something from this level. As it was nearing this pivot, it made sense that it would bounce somewhat off of it. It even bounced off this one ever so slightly, right at 1880. It did bounce, a little bit of bullishness came in, and this was a 2-candle stair step that then broke down. And so, these ones that are kind of the similar range, the bodies of these candles and some of the wicks make the similar range on these candles. And you can kind of draw the highs and the lows on this to see, okay, I can see when it breaks that. And this technically wouldn't have been a break if you included the lower wicks. But then when it stayed down here, it's clear that that was a breakdown of, maybe this stair step here, like these 5 candles right through here. And then this one started to not so much be a stair step, but actually a little more of a breakdown, a retracement, and, an S-curve kind of thing. There's, candles here that are stair steps. So recognizing kind of the range on these, the high to low, what you're picturing as a stair step. So like this would have been a nice stair step here. Actually, if you include this, so like these 6 could have been a stair step because there's some highs that are in common, and then there's some lows that are in common. Or at least you can tell when this low gets broken by this candle, that something has shifted in how this is moving sideways. And so, you can just see the bearish breaks on a lot of these. I don't know that I'd call this a stair step just because the high and the low aren't really clearly defined. This is a hammer and then more of a Morningstar reversal. Like I said, this is a high wave candle that immediately gets broken out bullish. And then I would say these two are a stair step because the high and low are closer range to each other. And again, that broke bullish. So you've got some patterns coming in that are showing that there's been a reversal and then a continuation higher. Just on a 5-minute, showing you what's going on. I wonder what the 3-minute looked like. Let's jump into the 3-minute and see if that. Let's start with that gap. Yep, that gap is still there. It was there in a 3-minute and a 5-minute. So that's interesting to see. You can see definitely stair stepping here on the 3-minute where we've got these lows, and then that's a break of that low. I like the triangle shape of these, breakdown. This is definitely a stair step. Like a lot of this is just sideways through here, just not doing anything, and it's being held down by the 21 also on the 3-minute. Starts to break down here, gets a little 2-candle stair step, and then a bigger breakdown that retraces a little bit. This is a really nice stair step on the 3-minute. It's right through there. Seeing what will happen in 1880, then clearly it breaks down with this candle getting below the bullish candles and below this one. So hammers, trying to come in and move it higher. So you have more bullish candles in a row in a 3-minute. So just be careful with how many you're counting and what you're looking for them to do, the different areas. This looks like more of a stair step here that did not break down. It's interesting. High wave candle right below 1850. This is not that one. This is more of a stair step right here, and then comes right into the 21. Actually, it looks like not the 5-minute, the 3-minute 21 was actually the target on these sideways moves or retracements. And once it hit that target here, it had to break through it. So like back on the 5-minute, this area, these candles did not touch the 5-minute 21, but the 3-minute did and just held that lower. So it looks like the 3-minute 21 was a better place to be buying than, all along the day. Buying puts, I should say, sorry. Buying puts here, buying puts here. Now, at this point, if you were buying puts, you were wrong pretty quickly, which is always nice to have that decision made for you and be out of a losing trade, quickly rather than holding on, hoping something's going to roll over. And ultimately did, break below the 21 again here just to pop above it. So yeah, interesting to look at that, to kind of study different candles and see how they're working different days. Something that if you jump into the community that I'm trying to refer you to, they say everything works, just not all the time. And so in this case, stair steps here looked like they were working, and showing some breakdowns, working better on the 3 minute versus the 5 minute. But the ones that came in over here, well, it didn't work, and so it worked on the 3 minute. Jump back into it. So it had worked on the 3 minute in here against the 21, and it worked on the 3 minute in here against the 21, but then it didn't work here, And so you can see, you can tie a few different things together. I'm looking for a stair step. I'm looking for it to roll over from the 21. Great, get embarrassed right here. Great, get embarrassed right here. Great, get embarrassed when that breaks down. Well, it didn't break down. So technically, that setup still worked, looking for a stair step against the 21. It just didn't go bearish. That's where it actually broke bullish. And so had you set up a bracket trade here, well, maybe it worked breaking through the 21, and that was the setup that time. So getting familiar with these different patterns, getting familiar with what you're looking for, and just having an eye for it, having some parameters that your eyes are looking for, but teaching your eyes, how to look for this, what you want to trade. That's really what's key. And then you start to see it, and you start to build, either scanners or things to look for it too. I'm just using my eyes and looking for different areas. And some days my eyes are better than others at catching them. But anyway, so we had a really incredible bearish move, taking out some other lows through here. We've still not had a close below this day, which is remarkable. That I'm sorry, below the open of this day. The open of this day was 1860. We've still had closes that have been above that, even on these bearish candles. And so now we have, I think it was 11. So now we have 12 bearish candles out of 11 bearish candles out of the last 12. Wait, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so one out of the last 12 candles has been bullish. That's it. Everything else has been bearish. At some point, it feels like we're going to get a bullish gap up here and just run. But until that happens, we're setting up for a bigger pullback, and we've got earnings coming up this week. So we'll see really what we do in terms of pulling back some more. That is totally possible. Going back to the 5 minute and zooming out, that downtrend line that I had drawn back here, we've been above it, but we're coming close to it. And let's see. What is that? Nope, don't want to do that. I just actually bumped something for an order. There we go. That downtrend line, it's not that much further below. I mean, we just have to get through the next pivot here at 1841.30, and we're really right on top of it. And so you had kind of a gentler lower highs through here, some higher lows through here, forming some sort of a triangle shape here. It's not as clean to see it. But this is definitely a breakdown. I guess I'm seeing something like this. Phil, let me draw. Come on. Draw. There we go. Something like this. And then something like this. And so that's a nice triangle there. And then this is the breakdown. Did not get much of a retracement anywhere. But I can see that as a triangle. I don't know how much that was, guiding what was happening on Friday, other than just a big sell-off coming in. But now, like I said, now that we're below some of these lows, we move below it. Let's see if we can stay below it next. We are below the 1863.84 price, which we've had closes below that, but we've just retraced right back up. Like this day we closed below, and we gapped way up here, looking like we were going to have a bullish gap and go and run, but we didn't. So that's the only other close we've had below this price, and we gapped up above it the next day. I don't expect us to gap up here, gapping above 1900 come Monday. Anything's possible, but I just don't see that kind of a move happening. I'm okay being wrong. If it does that, we should gap up here and just run. Um, I think it's more likely we'll have a continuation gap lower and get a bullish fade. So we'll gap down here or something and fade back up to this price, and then from here we'll see if we get another rollover. But that would be a little more fitting to what I'm talking about with this candle. I'm sorry, this downtrend line being down here. If we can gap down here, get a bigger retracement, and then see if we roll over and come down to that line or something. Again, I don't know. I'm just saying, what's the potential now if we have an open around here and then start to, do something like that, where we come back into that, bounce off it again, jog around, roll back down, and then ultimately come down to this line at some downtrend line at some point. It'll push to the lower 1800s. If we do all that and then they have a knockout earnings, we could be gapping up here after earnings and trap all these bears. So that's the potential this week. You just don't know how people will respond to earnings, whatever earnings says. But I wouldn't be surprised if you kind of picture what we did here on a fractal sort of perspective, where we had a nice move up, a nice gap up here, and a nice long stair step, for 6 days here, and then had this massive day. If you kind of squeeze all this down to the span of like these 6 days, it looks similar. You get, some bullishness, some bearishness, some bullishness, some bearishness, like flip-flopping candles like this. Bullishness, bearishness, have some more bearishness, okay, and then get a gap up. I mean, you could have a candle 3 times this height. I'm talking about a massive range candle on a day. But again, this was 1 day. This is 6 days. If this is the 6 days, it could take us, instead of 1 day here, it could take us 3 days. Just have a massive move higher and go from, let's say we pull back down to 1815 before earnings, and then it gaps up here to 1900 and then runs. It could run to 2050. That's $150 move from here, just like this had $70. I mean, $150 move is, or point move, would be nothing compared to what it did after this kind of stair step. So just picturing, just kind of talking through some of the perspective here of these things moving in fractals and the kind of move that we're looking for now. We've had this stair step. This is turning into more of an S curve, and it's just a matter of, okay, how much is it going to curve before it really picks up and goes? And that's what I'm saying. This is setting up with a lot of bearishness here, that if we get above it, not if, but when we get above it, it'll tear. It'll just run. And that's what I'm saying. It could contend with 2050 on this earnings with all this bearishness. All you need to do is get a gap up to low 1900s, and you've trapped a ton of bears already. That for the short covering and bulls getting in, it has the potential to push higher into 2050 really easily, and then continue. So I'm not saying 2050 is the limit. I'm saying 2050 is a nice near target, and then see what else happens. So we'll get a better idea as this week starts out, and how much more of a pullback potential we have. And then we'll talk earnings more as it approaches, and some things we can do. So hope this helps. This is just AMZN. Thanks.